Welcome to our session on trade. Hopefully you all are coming back from a great lunch. I have a great set of panelists. We have about 30 minutes. What I requested is that we actually get a few questions from the audience. So we'll probably talk for about 30 minutes and then try to open it up for 1 or 2 questions from the audience. I feel we've been speaking at the audience the whole day. Can you cue up my slides, please? I just thought I'll provide some context as we get into this discussion on trade. And we had Ngozi from WTO talk to us about it this morning. I don't see the slides yet, but as the slides come up, what you'll see is we did some work through the McKinsey Global Institute, which shows that we are interdependent as a world, right? If you look at every single region in the world and sort of different products and services, you know, every region imports a bunch of things and they export a bunch of things, right? So things are going to change. We know the new trade order is upon us now. It's going to change that, but we'll continue to be interdependent. So that's what you would have seen on the first slide. On the second is a bit what Ngozi talked about, which is if you really start to look at the impact of the tariffs on Africa compared to other regions, the truth is overall we're not as impacted, right? One, because we don't export that much to the US. Two is because about half of what we export to the US is actually, you know, not subject to these tariffs. But the question there for me is more, as opposed to playing defense, how can we play offense? How can we take advantage of this opportunity and really try to fill some of those supply chains that are pulling out of Asia primarily, right? So how can we as African businesses and African countries take advantage of the opportunity? So that's what I want to talk with my panel here. I was going to actually start with you, Jeremy. You know, you lead the most Pan-African of banks across the continent, and many of your clients are SMEs, right? We know SMEs account for over 80% of employment in Africa. I want to start with what is the impact of this new trade order on the SMEs in Africa? How are they reacting to this?
Yeah, thank you, Acha. So I think there's a multitude of impacts. The first is really just the mindset that it is much more complicated to do trade with partners that they've done before for many years. And I think now they're looking much more across Africa for new trading opportunities across Europe and other markets. The second is onshoring. We're seeing a lot more businesses looking at investing in the continent to produce their goods and services and sell them from there. So we're seeing increasing people and businesses looking at what more they can do. There are more delegations looking at how they can find more business across the continent. And when it comes to SMEs, again, they are also doing the same. They're, you know, from supply chain side, they're looking at who they can trade with, normally within the geographic blocks. So whether it's EAC or SADC or ECOWAS, they tend to form those blocks because it's easier for the goods and services to move than right across the continent. And we're seeing more focus on value addition, which is also good because it creates employment. But there are challenges that still exist to intra-Africa trade that they struggle with. The things we focus in as Ecobank, being in 39 countries, is how do we help them trade? How do we help them collect on their payments? That's a big issue for them. So you've got customers in another country, how do you do the collections? How do you get access to foreign currency to collect on your bills? Those are some of the challenges that we're still seeing our customers face.
Thank you, and we'll come and talk about a number of these topics, but the push of saying, given what's happening, how do we trade more regionally or within ourselves and increasing Africa trade, we definitely see that as a strong push. Yvonne, let me then turn to you because, you know, if I think of a Bank of America lens, then I feel like, you know, you probably serve more sort of larger corporates or governments, right? So we've talked about how the SMEs are feeling the impact of trade. Tell us a bit about how these corporates and how these governments are experiencing it.
Thank you, Acha. Understanding that the SMEs are really the heartbeat of economic development in Africa, we play a complementary role in trying to work with the larger corporates because we take an ecosystem view on how we help develop trade in the region. So we typically take an ecosystem-led view. What I mean by that is essentially what we have to do is make sure that that we can support the financial system where it needs it. As we know, money is not the only solution in any problem in life, including Africa trade. So also the technology backbone behind it and some of the other sectors that are relevant to it. And I'll give you a couple of examples, Acha. So when we consider the problem of supporting, the problem of increasing trade in Africa and how we can support that, what we look at it from different lenses. One is to say, from an advisory perspective, what are the things that we can do to help the sectors that matter? So we supported Move, which is one of our big success stories in the tech space, in doing a transaction where we raised $100 million in capital for them. We introduced 75 million of that from Uber, which then catapulted them to do other, and this is an amazing company that is now growing beyond the borders of Africa and fueling still trade in terms of getting people around. So that's one example. We're super focused on supporting transactions in the data center and the tech sectors, and we're doing a lot of work on that. In addition, I think very important to me is a product that we're rolling out this year. Our global payment platform is a phenomenal platform that supports the banks, and we are talking to ATI in Nigeria in the first instance, and other banks to facilitate their ability to handle more of these payments. And that platform has, for example, over 600 technology patents, which, apart from the fact that we are helping smoothen the payment and collection cycle of 15, 30 currencies, depending on what people find relevant in terms of global. In addition, we're also supporting those banks in terms of we can be a resource for how we have leveraged technology, because with over 600 patents this year, clearly we're doing a lot in technology advancement that we are ready to bring to the continent. You know, even another initiative in terms of supporting small businesses is our Breakthrough Labs initiative, where we support small businesses that are tech-focused. As I say, because we believe we understand the problems that face us, as a continent, we're really, really focused on anything that supports technology, energy, and supporting the small businesses indirectly, but we still play a very big ecosystem-led role in that.
Got you. And we'll come back to that, because I want to talk both on the small businesses, but also on the large corporates. Your Excellency, let's come to you. You're actually one of the first entrepreneurs to get into mining, right? I think in Africa. I'd love to hear a bit about that story, and then I'd love to then understand how is the mining sector then impacted by this new global trade order?
I started getting into the mining industry in 1986 as the first black underground mining construction entrepreneur. And Africa during that time was normally doing pick and shovel mining or artisanal mining or informal sector mining. And South Africa, the country that I come from, is very dominantly experienced in deep mining. So what happened is that in that country, the laws were prohibiting local citizens that were black from owning anything. We were not even allowed to own land or even own our own bank account because the apartheid regime, the racist regime, was still in power. So I had to defy legislation. And then little did I know, but I knew and believed that one day the country will be independent. So in 1994, Nelson Mandela then became the president of South Africa. And then by so doing, we then were able to venture beyond South Africa in mining, construction, and development. Because what I did, I started owning a company that will build mines by virtue of going on a tender. And it's like when you want to build a house, you go to a housing construction company to construct your house. So give me a piece of land anywhere in the world, and I'll build your mine. Whether it's Sidrun in Switzerland, where I built an underground nuclear waste disposal shaft, 200-meter shaft the longest railway tunnel in the world. Was built by my company in Sudrun in Switzerland, underground nuclear waste disposal shaft in Joinville in France, 500 million phosphate mine for Eurochem in Russia. So we're building mines all over. And by so doing, I also became, you get paid by virtue of getting payment management fee or equity participation. Also in Africa, AngloGold Ashanti was built by me and also other African countries, but what worried me in answering the question, the unstoppable Africa, we were colonized economically and politically, and we became politically decolonized. And to date, 2 years ago, I was the keynote address speaker at the DRC Mining Summit, and I asked the Minister of Mines, how many indigenous citizens in your country own mines? They said no one. And I said to the Chamber of Mines president of the Chamber of Mines, you were independent and liberated in 1963. And are you telling me from 1963 to 2023, you don't have a single citizen owning a mine? They said, no, we don't. Then I said, okay, may I, with respect and humility, share with you what we went through in South Africa by virtue of saying in the 27 years, it's 3 years ago, when we were liberated from the apartheid regime and Mandela became the president, let me tell you what we did. We created a mining legislation and legislation in any sector of the economy. When you go to the Minister of Finance, Mining, Trade and Industry, whatever minister, and you want a license to trade, they then say to you, if it's the mining industry, not less than 30% indigenous people must be owned by the broad-based, historically disadvantaged South Africa. Now, when you look at Africa, you find that the laws are not there. And because the laws are not there in terms of local ownership, you don't have local people owning anything. Hence, you have Boko Haram in Nigeria revolting for their oil concessions to be shared with the people. And then you found M23 in the DRC. We just had them last week. President Becky had a 3-day session for peace and prosperity in the Great Lakes and also in Mozambique. And some of the leaders from M23 were there and they call themselves freedom fighters, but those people that are unhappy with what's happening. And it came out very clearly, for as long as we do not own our destiny in terms of for the economic emancipation for the majority of the people, ownership will never go. And then we have something different. We continue to export our ore in raw material, and we don't beneficiate. Beneficiation means indigenization of manufacturing of the end product. And then what is even worse, taxation is not paid. And you find that what I see in the African continent as I build mines for the other mining houses, whether it's in Mali or Sierra Leone or Mozambique or whatever, where I build mines, you find that we don't have taxation payment. Foreign direct investors or local investors do not pay tax. And I've been I've got, in some of my mines, my partners, the biggest platinum company in the world, Impala Platinum, is my partner in platinum, and then Total Energy was also a partner in the coal mines, and Mitsubishi was in the chrome mines. So I have partners. So I'm not going to say which partner it is, but one of the partners was not paying tax. And every time I do get my dividends, and I'll send my dividends in the multi-millions back, and I said, no, taxation is there. You're doing illicit capital and transfer pricing. The country needs to get tax. So that never happened. So eventually I went to it's called Congress in South Africa, we call it the Parliament. I went to the Portfolio Committee of Parliament for Trade and Industry, Finance and Mining. It's a joint committee. And I said to the parliamentarians, we need to look at our law because I need my dividends to be paid in one of the mines that I own shares because my partner does illicit capital and transfer pricing. He's not paying tax in the multi-million. And then I also said the global's financial integrity has exposed that 174 billion non-taxation payment has been happening in South Africa and also in the rest of Africa. So then I said, so what we need to do, if we want Africa to progress, we need to have rules and regulations that will have a look at illicit capital, transfer pricing, make sure that the countries that have a primary listing offshore do not actually take out the money, because I see it, I produce my mineral for maybe $5,000 per ton, and then I say to the government that, you know what, I don't make money because I'm making a loss, and I sell the mineral to myself. Yeah?
No, go ahead, go ahead.
Okay, and I sell it to myself, and then the company, which is an offshore marketing company outside South Africa, I sell it maybe for a lower price, when the market price could be $5,000 per ton, and I sell it for $2,000 per ton. I say to the government, my cost of production is $3,000, and I'm losing money. What I'm not saying to government is that I have transferred the $5,000 per ton price to my company offshore. And the money, 5,000, gets into my company offshore, but the money, 3,000, that I get from the company that belongs to me, that is my marketing company, that I've sold the commodity at a lower price to $3,000 per ton, is not making money. Then taxation is not paid.
So, Ambassador, sorry, please, I was going to ask you. Go ahead.
So what has happened is, by so doing, what our Minister of Finance did, they call it, in America, you call it Secretary of Finance, or whatever. Anyway, we call him minister in Africa. So Minister of Finance then created illicit capital and transfer pricing committee by virtue of getting Judge Dennis Davis look into the illicit capital and transfer pricing. But the African Union Parliament also appointed President Becky to be the chairperson for illicit capital and transfer pricing. Something else that we also don't have is money.
Yeah, we'll come back. I think there are a number of topics you raised there, right? But I'd love to come back to that. Yes, we can please clap. This is a truly unstoppable African as we see. But I'd like to come back to that, Ambassador. But just wanted to piggyback on that, and Jeremy talk about, because the Ambassador started to talk about some of the regulations and things that need to be put in place so we can trade more within ourselves, right, within the continent. I'd love to understand has the impact of this trade order been on Ecobank, and what kind of policies or practices are you putting in place to address that?
So as the transition was happening, earlier in the year, there was a lot of uncertainty with all the executive orders. There was a lot of negotiation at a governmental level with, for example, the US. There was that uncertainty, and the uncertainty creates uncertainty in financial institutions because you don't know how those companies are going to be affected, right? So that affects the financing that we can give them. I think, like you said, Acha, now we're seeing that Africa is actually relatively better off than a lot of the competitors in Asia who are facing higher tariffs. So in a way, we have a unique opportunity to try and take advantage of that. What have we seen? We've seen other indirect effects on trading. I think companies are starting to, like I said earlier, look for new markets upon which they're going into. And a bank like ours, being present across the continent, can help those companies actually understand those markets, can help those companies find partners that they can do business with because they trust us in terms of we already have our customers in those markets. So if we're in Togo or in Benin, we're in Ghana, we're in East Africa, Southern Africa. So we can provide that bridge. And we've got a One Trade Hub, for example, a digital trade hub that is also connected to the Afri-Exim trade hub, which links buyers and sellers and the goods that they want to sell. We're also connected to the Mansa platform, which helps with due diligence of those companies to give more confidence to people who are doing business with them. And we're increasingly also working with partners to try and de-risk some of these transactions. IFC, for example, is coming in with some risk sharing. Africa Guarantee Fund is trying to come with some risk sharing. For the SMEs, what we're also trying to work on is the payment mechanisms. Those payment mechanisms are pretty challenging because access to dollars is a challenge. So we actually enable real-time digital payments that can be made cross-border. So a Zambian can send money to Ghana or to Rwanda from their phone. And I think we underestimate the power of these small trades. There's a lot of services that are also being provided that people can now pay cross-border without having to go and find dollars which are in scarce supply. So we've noted that as an increasing area of focus. So I personally feel whilst it's challenging in the beginning, we're seeing a change in the world order, a change that we have to grasp as Africa around increasing intra-Africa trade. At 15%, it is just too little. We're seeing what Dangote is doing now in Nigeria with his refinery. That fundamentally transforms what is happening in the oil and gas sector across, across West Africa, among others. These bold decisions are opportunities for us to actually add value across the continent and not just export these raw materials. And I think there's increasing confidence that investors are having to be able to do this. The thing which we have to address is long-term capital. That's still a challenge for us in the currencies where that long-term capital is needed. Because if we are always going to dollars, we're always going to struggle with exposure to exchange rates. And we know infrastructure is still a challenge, whether it's roads, rail, aviation, and that actually prohibits trade on the continent. And that's one of the challenges we're finding our business customers are facing. It's easier to get a flight and cheaper to get a flight from Africa to Europe or Africa to the US than Africa to African countries. And funnily enough, it is more expensive to go one African country to another than it is to go all the way across the world. So these are things which we have to address structurally if we're going to increase trade on the continent.
Exactly. We can talk about visas as well if you want to go there, right? But Yvonne, when I think about, you're in a global institution, right? And as much as we always say, the impact is not, the direct impact is limited, but there's, what we call the second bounce of the ball. So if you look at what happened when the US and India signed their agreement, and India now committed to buying more petroleum products from the US, that's products they used to buy from Nigeria, from Africa, right? And so there's indirect effects, right? So when you think of sort of a Bank of America lens and trying to figure out the impact it's having globally on your bank, how does that then translate to Africa?
So two other areas I'll talk about, and just piggybacking off what Jeremy was saying around infrastructure. So we're engaging our global clients, including large corporates, particularly the financial sponsors, and also the local financial DFIs and global DFIs on a number of levels, thinking through with them the innovative ways that we can help fund some of these big picture infrastructure projects that will facilitate building out the ecosystem. As Jeremy said, that's very, very important, and we need to stay focused on that. So that engagement and how we catalyze funding for those kind of projects is something that we spend a lot of time doing. And especially when we think about the payment backbone, again, it's a small and indirect way that we're increasing the support that we want to give to the local banks on how they can facilitate payments, because we understand the import of that. But if we think really about the local backbone of the economy, really, if we think about some of the payment solutions available today to catalyze trade, including PAPs, including Flutterwave and others, you still need a massive investment in technology, blockchain investment, things that will facilitate the ease of payment in a more direct, more efficient, more secure manner. That financing, that financing and that financial architecture that is required for it is large scale and is what we continually support. The second piece that I would say in terms of, again, a point that Jeremy raised that I want to pick up on, we must continue to innovate around the products, the financial products that allow capital to flow into and around Africa. And so we're very, very focused on the non-traditional ways of saying, how can we support local capital flows, working with, for example, institutions like Africa Finance Corporation. So we are indirect. We stand by those kind of organizations where if we do a back-to-back trade with them to facilitate more payment, they can provide funding into the ecosystem that then allows money to go in local or foreign currency. We're also innovating around the increasing use of insurance guarantees as ways to extend the tenor of financing into the region, to expand the amount of money that's available, and to reduce the cost at which this is done. All three are very important. So these are some of the areas where we're really focused. And again, thinking about, I spend a lot of my time thinking about the non-traditional ways that we can support the continent. So even when we think about financing for development, included in that debt for development swaps, for example, or debt for nature swaps, for example, but we've extended that a lot more to say, how can we support the funding to increase digital access, health, energy, education? All of these are fueled by the small businesses. We don't deal with them directly, but we are working with international DFIs, governments at a higher level, and in some cases corporates, to say, how can we make money more available to the ecosystem to make sure that we support that evolution? It comes really back to really focusing on technology, and how we ease the flow of funding into and through the economies.
Got you. Very clear. And lots of innovation along the way as well, right? But it's very clear as we discuss this, I think we're all aligned here that, what it's forcing us to do is to really focus on ourselves, on intra-Africa trade. So Ambassador, let me come back to you, because I also learned you're the special envoy for the, continental free trade area and for economic development. So if you put a bit of that hat on and try to help us, we talked about CFTA, we know it's in place, we know it's been ratified, but I think the real question is how can we really accelerate implementation of the free trade agreement? From your vantage point, what's it going to take for us to really accelerate that?
I think Lamkel is doing a good work as the head of the Africa Free Trade Agreement. But I think if I am also, over and above a mining entrepreneur, the special envoy for inter-Africa trade, economic development and entrepreneurship, Goodwill ambassador for the African Union Parliament, which is called the Pan-African Parliament. And what I'm trying to do in terms of looking at how one can address the impediments, the economic impediments that exist in Africa, is by virtue of looking at the 55 countries that come to South Africa, where the African Union Parliament head offices are in Johannesburg. Five members per country. These are senior members per country, former heads of states, former prime minister. Ghana had 2 presidents at one stage, former presidents, Mahama and Jerry Rawlings, the late Jerry Rawlings. So I'm saying we need to make sure that we come up with policies and rules and regulations that will say the following. Let us see what we do in South Africa. It doesn't matter who you are and where you come from. When you come to South Africa and you want a license to trade in any economic cluster, whether it's in banking, which is finance, and you want a banking license, or mining license, or manufacturing license, whatever it is, the minister will make sure that before they give you that license to trade, you have to comply to the legislation. And the legislation says there must be indigenization in ownership, there must be skills transfer, and there must, every department would come up with legislation of empowerment and B codes. So the B codes, like in the mining industry, for instance, the minister will say, okay, fine, who are you? I'm Anglo-American. You own 100%, yes. Where are you building a mine in the rural areas? And in the mining legislation says not less than 30% of historically disadvantaged South Africans must own the mine. Equity participation. Now you're going to, not less than 5% must be owned by the rural communities in a community trust, not less than 5% must be owned by workers, and out of the 20%, out of the 30%, not less than 20% must be owned by broad-based. So then you say, but where's the rural community going to get money? Then you say, okay, fine, you're going to lend them the money, and you to take you take the shares as collateral. And every time when dividends are paid, you make sure that the dividends pay back the loan, and come the time when the loan has been repaid, then you make sure that you know, the money gets now into the rural community trust in terms of the trust deed. The trust deed will say, we want roads, we want clinics, we want bursaries for schools, we want to create schools, we want to create houses. So just to make an example, in one of the mines that I own with Impala Platinum, which is the second largest platinum produced in the world, 7 communities own 7% instead of 5%. These 7 community tribes is a community trust. And the community trust, what they do is 293 million dividends was paid in 2003. And then they invest the money into the roads, the bridges, the schools. They don't wait for government to come and invest and build those. And also, so you find that what has to happen before you get a mining license, you have to comply, you've got to consult the local municipality, the provincial government, the national government, and then see if it's the road, the local government, the provincial government, and then you come together and you come up with the integrated development plan where every sector of the economy, you included, will contribute towards that. So it helps a lot. Yeah, and then the small and medium enterprises own 20%, about more than 100 companies. The lady that was selling a hawker, having a hawker stall, selling just vegetable, she has her own vegetable market. Another one has her own bakery. Another one has her own butchery. So, you know, that's how small and medium enterprises progress.
And then, thank you.
Yeah.
And so it sounds like, you know.
Those are the laws that I want at the African Union Parliament to share. So I say to the President of the African Union Parliament, he was here today, I'm not sure if he's here, he's not here, he was here this morning, that we need to have a session where we are going to invite the South African Portfolio Committee to then share with every committee of the African Union Parliament what the road it is that we travel, also to learn from them in terms of what we could have done better, not for us to say we know better.
Absolutely.
We just come and share and come and learn, but also to make sure that when we are going to have companies that are going to invest from outside Africa, then you say, okay, this is the African continent. The terms of reference are the following. These are the charts and these are the codes. And this is how the local participation should be. Then you avoid a situation like I did see in DRC in 2023, that not even a single person since 1963 is owning.
Exactly, exactly. Jeremy, let's then talk. I'd love to hear your perspective on what needs to happen to accelerate the implementation of the CFTA very practically.
I think there are a number of things that need to happen. First is we need to work together to achieve a change in mindset. And by that, what do I mean? Increasingly, we're seeing nationalistic mindsets within government. And I know this might be controversial, and we understand the challenges around governments within their local context. But I think, as was said earlier, if Africa wants to compete, it has to bring the strength of us being together as 54 countries. That scale is what will enable us to be able to make meaningful change to all our citizens. So that mindset is very important that we change. The second is we need harmonization of our policies and procedures. So when goods are moving around, you find there's completely different policies, procedures, taxation regimes that create bottlenecks, and those bottlenecks cost. You can see between countries, sometimes you find miles and miles of trucks queuing to cross a border. Those add days. It can be quicker for you to send a container from Hong Kong or from Asia to Africa than it is to send it to a neighboring country because of those bottlenecks. So harmonization of the policies as well as the tariff and non-tariff barriers. I think the third is the mindset around access to foreign currency and charging and being paid in local currency. The biggest thing that people complain to us about is that I've sold my products in country X, but I can't get the money out of that country to where they're sending it from. Now that's not good business. If you've got the money stuck in one place, they want to send it, but they can't take it out. It's the net effect of just like not being paid. And then people become hesitant. If I can't get my money out, should I invest more in that trade route? So those things are important. So we have to invest in the payments mechanisms. I think if we can do more local currency to local currency payments, that will ease the pressure on the dollar. I think the other thing we need to do is we need to work together as African institutions. We've got the development financial institutions, the big organizations who have the best ratings and can access capital at the cheapest level. If we want to be able to finance infrastructure, we need to work together to get the cheapest capital and inject it into financial institutions on the continent, who will then on-lend it at 5 or 10 times into the SME segment. So a shocking statistic that I always tell people, the total capitalization of all the banks in Africa is smaller than one bank in this country that we're in today. All of Africa, the tier 1 equity is smaller than one bank. Now, the amount you lend is determined by the amount of capital that you have. So if we're saying we need 100 to 200 billion invested in infrastructure, structurally, we have to go outside if we need to get the money, which means we're exposed to foreign exchange risk. I think the mindset has to change. People should not take their money and invest it overseas. That money should be invested in the continent. It should be invested in long-term projects, whether that's pension funds, sovereign wealth funds. If they invest in long-term projects, they will get a good return. Typically, organizations, African organizations are going out and they're spending 10+% on Eurobonds. This is very expensive that we have to find the dollars and that FX to be able to make those payments. If we can do it in local currency, it's a much more effective way. And I think the governments can change their policies around pension funds, around their sovereign wealth funds, to insist that portions of that can be invested in longer-term infrastructure, project finance, can be invested in tier 1 strong financial institutions that will be able to create the capital and lending that will drive the economy.
Got you. Thank you. And Yvonne, let's then come to you. I'd love to hear your views, and what else would you add?
So I think we need to stop trying to harmonize 50-something African countries all at the same time. And we need to start using data and information to prioritize the countries, the trade activity, and the specific policies that we need to harmonize. Otherwise, we just don't have the time. We don't have the time, the progress that can be made. Today, at $3 trillion, Africa represents 3% of global GDP. There is very little stopping us from getting to 3-4 times that amount within the next 5 years. With that, we need focus on data. We need focus on technology. I can't agree more with Jeremy. We must continue to innovate on how the sources of capital increase within Africa and outside of Africa, and how we use other alternatives like gold, how we leverage blockchain to increase the exchange between local currencies without necessarily needing to physically or even electronically settle with dollar when we don't need to. And one other thing that we haven't spoken about today is really to develop the talent that must be able to facilitate this trade, this business, and the technology behind it. Those are the 3 things that I would say are the most important.
Got you. I promised to come to you guys. We have time for one question. Anybody want to ask a question? Is there anybody? Going once? Oh, there's one person. Do you have a mic? The mic is coming to you.
Okay. So, hello, I'm Dr. Amani Asfour, President for the Africa Business Council. Thank you very much for the panel. And thank you, my sister Bridgette and everybody, because what you have been saying regarding the value addition and beneficiation is our unifying our vision, which is the Africa Mining Vision. So my question here to the panel, because we will be organizing the CAMRAD, which is the Congress for Mineral Resources Development, especially for what you are doing, the value addition beneficiation. How can we really have the role of the private sector, the enabling environment of the investment in minerals, how we bring the Africans to really invest in our mineral development for value addition beneficiation? Because what's happening now is the big companies coming and taking all the resources of the continent.
Got you.
We need to have a special percentage, and I say 40% of all government procurement goes to African private sector, including SMEs, women and youth. Thank you.
Thank you very much. So we are out of time, but I would love if each of you to answer that very, very briefly. What do we need to do to make sure as Africans we make the most of our beneficiation and we benefit the most from it?
Yeah, to make the most of beneficiation, we need legislation. In South Africa, we've got the Minerals and Petroleum Resources Development Act, Section 26, that says very clearly, any company that exports its ore to a foreign company, that company has to consult the Minister of Mines in consultation with the Minister of Trade and Industry. Both ministers can ask Caterpillar, who are you? What are you doing with the iron ore or manganese, whatever that you get from South Africa? Caterpillar might, let's say, and then, Barloworld might say, I'm creating Caterpillars, or Toyota might say, I'm taking the platinum to create catalytic converters in the engine of the cars. So why don't you do it in South Africa? Special economic zones, we have to create special economic zones. We also have to make sure that we have a conducive environment where the law in the country does insist that localization of the end product must be enhanced in the countries. And we are doing that, and that's what I want to share with the African Union Parliament in terms of how can we transport those visionary laws by virtue of sharing with the parliamentarians, then we can go to the regions in Africa and see how we can share our legislation with the African continent legislation and create beneficiation, localization of resources.
Great.
Thank you.
So legislation is the key. Jeremy, do you have?
I would say local partnership requirements, local training requirements of nationals in that country in those areas, right? So are we building enough of the skills that in the future they will be able to run more and more of this? And also just make sure there's development requirements within the communities in which they are actually operating, because otherwise they're just extracting and will leave us with a problem at a later point.
Absolutely. And Yvonne, any last words from you as we close?
It's a very, very exciting time for us for trade in Africa. There's much more progress that I've seen over the last 3 years. This is a time when, as complicated as it sounds, if we focus on the right things, I really think that trade will transform the platform. Again, the right things from my perspective are really around technology, building out the financial architecture, and also supporting the businesses, especially the financial sector, in providing more innovative financial solutions for the continent. We have a bright future.
Absolutely, we have a bright future. And I always say this new global trade order is forcing us to do what we should have always done. It's forcing us to think about how we can work with each other and own our destiny. So thank you very much. Please join me in thanking the panelists.